Assalamualaikum, my name is Zaidatul BINTI ADNA. This presentation is being prepared with the intention to discuss and give explanation regarding to the effect of COVID-19 pandemics have towards the Islamic financial institution. As most people know, the COVID-19 has affected the whole world started in year 2020. The virus has halted all activities and performance around the globe for almost 2 years. Aside from the negative impact that the virus have toward the physical and mental health, coronavirus has affected the world's economy greatly. According to Statista website, the total gross domestic product (GDP) for the entire world has decreased by 3.4% in 2020. The first cases in Malaysia that involve a Malaysian can be found in 2019, where a 41-year-old man was tested positive for the novel coronavirus in 2019. In order to prevent the outbreak from continuing to spread, Prime Minister at that time, Tan Sri Muhyiddin Yassin, has declared a Movement Control Order or MCO for the whole Malaysia starting from March 18 until 31st to counter the virus. Throughout the measure implementation, all of the activities and work has stopped. Nevertheless, by shutting down all activities in the country is definitely not the best solution for the long time of period. The citizens will get tired of it eventually, and the economic growth cannot be helped anymore if there are no productivity. According to the International Trade and Industry Minister Datuk Seri Muhammad Azmin Ali, recognizing the urgent need to resolve the current economic crisis, the government has agreed to resolve the current economic crisis. The government has agreed that economic sectors have been allowed to operate in MCO Phase 1, 2 and 3 to maximize the employment, uptime and unlimited operation time according to the needs of their respective industry. Islamic banking has become one of the most important forms of alternative finance in the financial world. Muslims has always had a growing demand for financial products and services that comply with Sharia or Islamic law. Islamic banking is not a new phenomenon, and its principle was practiced in the time of Prophet ﷺ. Officially, Islamic banking started in the late 1970s with a handful of institutions and insignificant amount. In 2000, in order to fulfill customers' demand, Islamic banking products were introduced by two Islamic banks, namely Islamic Bank Malaysia Berhad (BIMB) and Bank Muamalat Malaysia Berhad (BMB). 17 commercial banks, 5 commercial bank trades, and 7 discounters and 4 foreign banks. Among the products that is currently offered by Islamic Bank include Al-Murabahah, Al-Wadi'ah, Baik Salam, Baik Istisna, Baik Bithaman Ajil, Baik Innah, Al-Ijara and Ad-Dain. Murabahah is a transaction of sale with a market price. The condition of this transaction is where the seller will buy product on behalf of the buyer and proceed to sell back to them with a market price. The seller will sell the product by mentioning the cost and their profit to the client. Payment of the product could be done in the lump sum or deferred payment. Wadi'ah literally means safekeeping. The concept refers to the relationship between two parties based on trust or amanah. In Islamic banking, this concept applies when a customer deposits a certain amount of money in an Islamic bank and gives permission to the bank to use it for the profit, and all risks associated with the deposit remain with the bank. This means that any damage suffered by bank during the storage is the responsibility of the bank unless it is beyond the control of the bank. The effect of COVID-19 towards Islamic banking. As most countries implemented lockdown, it will give negative impact towards the economic growth of a country. The global economic growth will decline, thus it will affect the Islamic financial institution in any way. The COVID-19 recession has exacerbated employment and income problems for Malaysia's young workers. Due to the tighter restrictions of implementation of MCO in order to curb the spread of COVID-19, Malaysia has recorded an increasement in the unemployment rate in June 2021. Due to the increasement of an unemployment rate, the borrower from bank will not be able to fulfill their requirements to pay for the previous loan made as their income is not sufficient. Besides, the accelerating credit growth, especially for the riskiest companies, could hurt banks' balance sheet and reduce banks' capital adequacy ratio. The changes during COVID-19 pandemic affect the bank's way of working. Banking executives face the daunting task of balancing a traditional risk management approach with the need to react quickly to a crisis that has created major changes in the environment. Cybercrime activity, including fraud and phishing attacks, has increased as more employees work remotely. On 1st April, Malaysia will enter the transition to endemic of COVID-19. With all restrictions on business opening hours lifted, employers allowed without social distancing. Prime Minister Datuk Seri Ismail Sabri Yaakob, in a national address on Tuesday, said moving to the endemic phase was an exit strategy that would allow Malaysians to return to a near normal life after nearly 2 years of fighting the pandemic. A few initiatives implemented by the Malaysian government in order to develop financial institutions during the endemic. Firstly, the deferment of all loan payments for a period of 6 months, effective on 1 April 2020, and credit card outstanding balances can be converted to a 3-year term loan with reduced interest rate. Next, banks may draw down on capital conservation buffer on 2.5% of 2.5%. BNM said this flexibility is part of a second economic stimulus package to deal with the impact of coronavirus outbreak on individuals and businesses. Furthermore, Bank Negara Malaysia also to supply daily ringgit liquidity to banks, and banks may operate below the minimum liquidity coverage ratio of 100%. According to Afing Huang Capital Research, the liquidity coverage ratio of Malaysia banks is expected to decline further this year. Concisely, COVID-19 has brought a lot of impact not only towards the physical and mental health of the people, but the pandemic also affects the sectors of social, economic and politics of a country. As nowadays people relies on bank in order to own their asset, the knowledge regarding to what is currently happening around them is particularly important. People should be able to know what the initiative is taken by the government in order to develop the financial institution. This is because it is indirectly helping the public to secure their assets. Hence, the public should fulfill their responsibilities as a customer to help the financial institution. If the public refuses to help the financial institution, the firm cannot exercise their duty in helping both publics and the country. Thus, both public and government play important roles in assisting the bank to rise, especially after the hardship faced during the pandemic COVID-19. That is all from me. Thank you very much.